Hello and welcome to BQ Pramam. Hiral Dadia. Very good morning to all the viewers. Clearly, if you see in terms of markets, a third consecutive session of decline is what we are seeing. However, the cuts are not that deep. To join us in terms of, which stocks you should be looking at from an investment perspective, we have Vivek Karwa, Chief Executive Officer at Riddhi Investment, joining in. Vivek, good morning and welcome to the show.
Good morning, Hiral.
Vivek, let's start off with firstly in terms of the IT major, which is Infosys. The fall was arrested in yesterday's session after the deep cuts that we saw. Today, again, we are seeing some bit of pressure that has started to build in as well. Overall, what's your view in terms of an Infosys? And would you advise an investor to look at the counter at current levels, or would there be an alternate strategy to play the IT theme?
Hiral, the IT results had just started. In fact, first was the IT major TCS, which announced its results, and that was okay sort of results. Then came this, I say, almost a bomb results by Infosys. In fact, it bombed. I should be perfect in my wordings. It bombed in the market, and the results were really pathetic. Of course, there are various factors to it, particularly because US is going through a recession. The spending in IT has reduced, and the margins are under pressure because inflation everywhere is on the higher side, but hence the margins of these companies are under severe pressure. So Infosys did not come out with a good set of results, and that uh, brought the stock down on a single day by 10%. And hence, yesterday, what we saw was a value kind of buying because after 10%, and if you look at technical charts also, not just fundamentals, even technical charts, Infosys has many times come around this 1150, 1160 levels and given a bounce back from there. So whenever it made a panic low, it was during this around these levels, 1160 levels, wherein it bounced from. So I feel if somebody really wants to enter IT, have a time scope of at least 12 months because what I feel is the interest rate cycle has stopped. I don't think there is going to be big hikes from here, maximum 0.25 percentage from here. And that will stabilize the US economy. So it will take 12 months at least. So you can buy here with a stop loss of 1160 because that's a great support. And in 12 months, we might see approximately say 10 to 12, 10 to 15 percentage of returns from here. That's quite possible because the valuations have actually fallen down.
Right. Moving on, you have a Shipping Corp of India, which is seeing some smart gains in today's session as well. Now, overall, if you see in terms of the news around it, firstly, there has been a circuit revision, in terms of the counter. Overall, probably a lot of chatter going around with regards to it being a divestment target as well. What would you advise an investor to do with the Shipping Corporation of India?
Hiral, this is a great company, but in wrong hands. Wrong hands in the sense government's job is not doing business, and this government is very, very clear that our business is not to win the business. So they only have to govern. And hence, wherever possible, in fact, today we are seeing the BEML, Bharat Earth Force Limited, wherein that has demerged into a land parcel separate,
Yes.
whatever land assets they have, and the core business separate. So similar process is going on in Shipping Corporation also, wherein shipping business would be demerged separately, and all the assets of the company will get demerged separately, and that government will hold, and the business alone might get divested. So once that happens, I think Shipping Corporation is super undervalued at these prices. If you look at the movement of other companies, particularly GE Shipping, this stock has not given any returns to the investors, but the core business is very, very good. So I think one should buy with a short-term target of 104. That is possible, which is almost 10% from here because the stock is at 92, 94 right now. So 104 could be a reasonable target. But one caveat over here, we are talking about demerger and divestment. Demerger might happen, but because that's in government's hand, but divestment can take time at times. For example, Concor, Container Corporation, there's divestment news going on last 3 years. Government is serious about it, but market is not supporting it. So that can delay the divestment process. But the stock is very good. If you are an absolute long-term investor, yes, you should hold it.
Right. So that's with regards to Shipping Corp of India. Now, another angle that I want to take into consideration from a sector perspective is the Alcobev companies. As we know now that the Delhi is refusing to renew Pernod's liquor sale license. Now, one thing is that every state has to, the company has to procure the license from every state. Now, to my understanding, this is pertaining only to Delhi right now. Now, if the license does not get renewed, do you think this can add to the benefit of the Indian manufacturers and Indian Alcobev companies? And if so, what would your view be?
Now, to be blunt, Delhi is refusing, and the Delhi whole administration is also stuck, and CBI inquiry is going on them, right? For a similar kind of corruption charges, which is even this company is accused of. So this is more of politics, I feel. And what I feel is, if not today, maybe a month or two later, the licenses will get renewed, because the whole company or the whole business will not get stopped as such. And liquor business is one such, which is lifeline, or you can say oxygen line for any government. I am speaking to you from Chennai, and the biggest revenue to the Tamil Nadu government comes from, again, liquor business. So this is one common phenomenon across India. So this could be a temporary thing, and due to that, there are some stocks which are going down. But liquor as such, I find that longer term should be very, very good over here. And if you look at the say population to the consumption ratio of liquor, India stands nowhere. In cities, we might find that almost everybody is drinking, but the leisure drinking will still pick up more, and I think the ratio is too low in India. And hence, this is a space which is for absolute long term. Yeah, this kind of political headache will continue happening. And once this sector also comes under GST, now that's a uh, no, no one can predict when it will happen. But yeah, once it comes under GST, this sector can actually do very, very well. So my favorite pick in this space would be United Spirits. Though there are brokerage reports today undervaluing the stock, in fact, giving a lower target of around 650. But I feel stock should not go below 700. It's a great company. And it was a Vijay Mallya company, and was taken over by Diageo. And Diageo has cleaned the books totally, and they are focusing on only on premiumization right now. So this stock should do well over a period of time.
Right. Moving on, you have ICICI Lombard, which reported numbers as well. Now, clearly, if you see in terms of the performance, that's been satisfactory. However, there's been a reaffirmation in terms of where the guidance goes at almost 102% COR by FY25. And this is despite the dynamic regulatory and insurance market environment. Now, how are you looking at ICICI Lombard? And from a valuation perspective as well, what would you advise an investor to do?
See, valuations have corrected a lot. In fact, stock was trading at 1600 levels, and it has corrected a lot. And I feel if somebody really wants to enter, should enter with a stop loss of 1050. I'm giving you stop loss here because though actually stop loss is not required, it's a great company. But 1050 should be a stop loss because markets can get very, very volatile nowadays. So results were satisfactory. And I feel this is one space which will keep growing. But the insurance sector as such is under pressure right now because there's IRDA say investigation going on, wherein the allegations are that these companies have been paying more to the brokers and even to the banks. In fact, today's one of the leading newspapers is carrying this story on the front page itself. So that pressure is still mounting on those companies. But overall, general space, I think, will continue growing by minimum 15 to 18 percentage going in future also. So it's a 10-year story. But short term also, yeah, I feel it can be a 1500 stock. So 1050 should be a good stop loss and you should buy.
Right. So that's with regards to where ICICI Lombard goes. Moving on, you have the Pharma Pack, which has been up and about in trade for a second consecutive session. And the momentum specifically with the Divi's Laboratories is really strong. How are you looking at the Divi's Laboratories in trade, Vivek? Because in terms of the stock price as well, Last 1 month, almost 19 to 20% is the kind of upside that we've already seen in this counter.
Hiral, I am in fact enjoying the pharma movement because just 10 days back, we invested in pharma and made our clients also invest in a lot of pharma mutual funds as well. So everything is up. Everybody is happy. Market is not doing good, but our pharma stocks are doing good. So there was again reports which was out, I think, day before yesterday, wherein uh, the brokerages are really bullish on pharma sector as such, and the prices from here are likely to move up. So you should look at space like CDMO players, and Divi's is one stock which has corrected almost 40-50% from top and is super undervalued right now. So pharma as such, you just blindly touch any pharma company, Hiral. Say first rung pharma company, the stock prices are lower and they give you space of almost say 20% rally from here very, very easily. So if you want to buy a smaller, of course, Divi's is the best bet. You should definitely enter into it. And if somebody really wants to go into, say, contrarian pharma stock, Biocon also is looking amazingly well after this kind of correction. So the downside should be very, very limited, but the upside can be 15-20% very easily. So pharma is a buy, as I said, disclosure. So we are invested in pharma.
Right. So that's the farmers pack as a whole. Metal stocks have been up in trade as well, and this is mainly on the back of the impact of dollar, which is below the 101 mark already. Now, this is pretty much cyclical. A lot of ups and downs that we've seen in the last 3 to 4 months with regards to metal counters. What would your view be from here on?
The metals is a cyclical bet, and lot depends on how China performs from here. So there are two ways to look at it. If China opens up fully, starts say the demand of metal sector, and the prices go up, the metal companies will do well. But that has a negative effect on the Indian economy because we are consuming a lot of metal right now for our infrastructure needs, and that again puts up inflationary pressure on the government budgets. So it's a double-edged sword. So I feel metal should overall do market performance from here, not outperform. It just would be a market performance. But after this correction from tops, for example, I'm seeing chart of Tata Steel from 124, it came or below 100 and is trading at 109 today. So these kind of stocks look good, maybe for a 7 to 8% rally overall. And aluminum would be my first bet over here. Two reasons. One is metal, and the other is a lot of play in the EV space as well. So aluminum should be the number one bet. So if I have to name stocks, I think Nalco and Hindalco really looks good. So overall, metal will be market performer here, not outperforming.
Right. And very lastly, one more sector that's coming to my eye right now is the rice stocks, KRBL, Kohinoor Foods, as well as LT Foods. All the three counters are up in trade, and there has been a report with regards to a global rice shortage. And this would be the biggest one in the last 20 years. I think it's a report by Fitch that's coming in. If this continues, how are you expecting rice companies to move overall? Because it's not only from a demand domestic market perspective, but even from an export perspective, if you see, if shortage is going to lead to price hikes, how does it impact margins?
All these rice companies, two parts to it. One is all these rice companies have corrected significantly, and hence, say even if this news is not there, they might give you a 10% rise. So this is one thing. Second thing, yes, we are talking about El Nino effect this year and some sort of shortage of rains. All this will make rice prices stay high. But here, when we talk about exports, say we also have 140, 145 crore population, which has to be fed, right? And government is very, very clear. They already have restrictions on exports. And I don't think they're going to allow these companies to export freely. The similar story like sugar, what is happening. So I cannot be very bullish on these stocks. As I said, for no reason also they have to move 10% because they have corrected a lot. But if you think they are going to really outperform here, I don't think so, because the restrictions on export will stay here and government would not take the risk of exporting the rice available in India and then seeing the rice prices shoot in India. And next year is budget. I mean, sorry, not budget, your Lok Sabha elections. So that will be always kept in mind when it comes to agri products. So 10% rally is fine, but don't expect, say, a lottery out of it.
Right. So that's with regards to a short-term rally that could come in terms of price counters and a short-term bet that Vivek is indicating. Thank you, Vivek, so much for joining us on the show and giving us those views with regards to what should be done with all the movers and shakers in trade today.
Thanks,
Thank you. Stay safe and speak to you soon again.
Thanks.